Hey guys, what's going on? It's Rod with the Hodler FUD Crypto, your new source for all things cryptocurrency. Guys, go ahead and do yourselves a favor, hit that subscribe button, turn on the bell notifications, and like these videos if you want to stay up to date on all the content we're releasing. We're bouncing back and forth on schedules here right now, guys. We're trying to keep it fresh. We're trying to keep the information relevant. We've had a lot of support with the Cardano videos, which is huge for us because we're a huge Cardano supporter. We also have done quite well on all of our small cap or lower cap altcoin reviews and price predictions. So we are going to continue to do those. But guys, I think the single most thing that we need to understand with cryptocurrency markets is we got to look for trends. And the last 2 days with all this red candles flowing in, unless you're in Cardano, you're starting to wonder, is this for real? Or where are we? Or what's going on? Well, guys, everybody's telling you the trend is your friend. So what does that mean to us? Where are we today? And what does that even have to do with where we are today? Like, what is going on in the market? Because 2 days in a row, we've seen absolute massive amounts of manipulation pulling this thing down. And you're starting to wonder, if you're new here, what have I gotten myself into? What is going on? I know it wasn't going to be easy, but is this for real? Well, guys, I'm here to tell you it is for real. Okay, and what you've got to understand is it's going to take patience. We've told you from the start, patience will pay off. Perseverance will be rewarded. But guys, every time that there's this mass amount of manipulation, whether it be an oil pipe hack, or we've got Elon Musk tweeting about his next favorite project or where he's going to go, and we're going to talk about that a little bit today. You know, you got people saying like Vitalik Buterin and the manipulation he's going through in the marketplace. Guys, this is a lot bigger than just micro what's happening in cryptocurrency. It's a macro effect right now. So I think I'm going to close with how I think the rest of this year is going to go and how it's going to look and the outlook I have for it. And we are going to continue to cover that kind of stuff because I think it's important for you guys to stay grounded and really see what's going on as a whole in the market. I think the first thing we ought to jump into here is how Elon Musk hasn't lost his Twitter rights. Well, you know, as a cryptocurrency content creator, everything we say is censored. And if there's stuff that we put out there, it gets taken down. But yet this clown can go on and say whatever he wants and just rock the market, whether it be a stock market or the crypto asset market. This guy goes out and he tweets something and there's a reaction, and it's either a good reaction or a bad reaction. And you either love it when he pumps it or you hate it when he dumps it. But guys, this guy has figured out a way to control things. Now, I don't think he's the type of guy that's going to go out and tweet something and then short the market and hope that he prospers. I mean, he is a billionaire, so there is ways for these people to make money. So yes, that may not be totally beneath him, but let's just say ethically he may not be doing that. May or may not, none of our business. But what we need to look at is some of the tweets and what he's saying. So yes, he goes ahead and says that Tesla will not be accepting Bitcoins as a form of payment until, and that's the key thing, we got hung up on the beginning of that, Tesla, no Bitcoin. We got upset. Until we can get a sustainable energy source providing for that. So there's definitely things that Tesla is trying to do to manipulate the market to think that we're completely out of Tesla, or we're completely out of Bitcoin. Tesla is not doing Bitcoin anymore. That's not the case. He went on later to say that they are continuing to hodl or hold their stake in Bitcoin. So what we need to understand, guys, is why would he go out and say something like that? Well, yes, he probably did want to drive the price down. And why would he want to do that? Well, gee, I wonder if the profits from Q1 were just released and maybe there's a bunch more Bitcoin out there that they want to buy. Guys, what we need to look at as a whole is what is he saying? Well, he's saying he's trying to find a sustainable way to mine Bitcoin. That's what Tesla's gig is energy efficiency, green energy, renewable. The electric vehicle is the thing of the future, guys. Like, it's almost here. It's going to be shoved down our throats to where it's going to be near impossible to buy a gas-powered car by, we'll say, 2030, okay? So the very big realization is Musk or Tesla itself is trying to gain control in something. But what we also have to look at is his next tweet, which was today. So the other one was from yesterday, but this one's from today. He says, working with Doge developments or Doge devs to improve system transaction efficiency, potentially promising. So no sooner does he say that, 30 minutes later, the price of Doge pumps from 40 cents, held strong at 40 cents, up to 49 cents. I haven't checked it recently. I don't know where it is at the time of recording. But so interesting. I don't think he's maybe hinting that Doge is the future currency of just Tesla or the world, but he's always said things to lead us to believe that he has a fond, affectionate bond with his Dogecoin, and to each their own. If that's his bag, then hey, sweet. But what we need to understand is the next thing he says, and 2 hours after that tweet, was, to be clear, I strongly believe in crypto, but it can't drive a massive increase in fossil fuel use, especially coal. Well, my government in Canada has been phasing out coal, and I'm sure it's not going to be long for a lot of the other nations to be doing the same thing. But it's really ironic that a guy who's created an EV, that his car plugs in to charge. So yes, I understand there's benefits gained from having an electric vehicle for emissions and carbon released into the atmosphere, and how the EV is more sustainable. I gather all of that. But why attack another thing that's using power? Because the very basis of what Tesla is built on is plugging in to charge your car, and not just for a couple of hours. Like, if you want to charge it, like, you're looking to plug in for the evening kind of thing here. So, I mean, it's really confusing on what he's trying to actually do. But through all of this, doesn't he start mentioning Cardano? And following that parade, we get a news report that says Cardano Foundation suggests Cardano and Tesla are obvious match after Tesla says it won't take BTC payments due to environmental issues. This potentially could be good or bad for Cardano or ADA, depending on how you look at it. Now, we do know that the Cardano blockchain is now in hands of the staking pools for creating blockchain. But I really don't know if I like this relationship, just with how volatile Elon can go on his Twitter rants and then absolutely pull the price down. Now, no sooner did this report come out, the last couple days, Cardano has kind of been unfazed by the pullback. Sure, it fell down to $1.55, but it wasn't there for long. But so you can see that the Cardano Foundation tweets in this report. It says Cardano Tesla, an obvious match, ? A thread. It means I don't think that there's a whole lot of substance to what we're doing here. But you never know. You never do know. Again, it goes on and it shows some comparatives of why it could be a good match in this image on their Twitter. But I really don't know that that's where the match is. I really do feel that Tesla is going to be trying to come out with some kind of news around Solar City and it being a mining organization there for Bitcoin. So I really do see a bigger play in all of that. So that's kind of where we are with the Tesla thing. Elon's got way too much power. He's like a kid with his toys. And he's going to continue to manipulate markets. Doesn't matter how many warnings the SEC issues him. He's just going to continue to play. So the other big thing that people are talking about is how Vitalik Buterin, he donates $1 billion of Shiba Inu coin to the India COVID relief, and how that had to do with quite a bit of manipulation. Let's get one thing clear here, guys. Vitalik Buterin did nothing more than get rid of a coin he didn't want. This was unsolicitedly sent to him by the founders of Shiba Inu, and it's even listed in their white paper that they were going to be sending that proceeds to Vitalik Buterin. Well, he got them, and he didn't want them because it actually put a big strain on the Ethereum network. So what did he do? He shed them. He sold what he could, and then he liquidated the rest and gave it to the COVID relief fund in India. Well, yes, of course, there was a price discrepancy or an interruption for that coin, and they saw a favorable fall down. Well, let's get one thing clear now. What Vitalik did definitely had ramifications, but why are we pinning it on this guy when the founders of Shiba Inu did it purposely so it wasn't them pulling the rug on the people that were getting into this new meme coin? Vitalik Buterin did nothing wrong, in my opinion here. He got rid of something he didn't want. He got rid of a possible, he got rid of a huge traffic jam on the Ethereum network. So as all this was going on, we did see gas fees go way up. They're not back down yet, but what happens when we have a large congestion of transactions is gas fees go up. He's trying to clear room on the network. But at the end of the day, the founders of Shiba Inu coin really wanted him to do this. They wanted him to do the dirty work on the rug pull for this coin. Now, I'm not saying it's done or it's dead or whatever. If that's where you want to invest your money, then that's for you. It's not for me. I do try to find ways that I can make profit, but again, I'm not going to go and FOMO into a coin and hope that I can make money. That's just not where it is. Now, if I can find something that's pumping early on, then I might try to get in and ride it up, but I'm certainly not going to start reading media stories and start throwing money into it, especially after something like this. So, just a little bit of a background, guys. He didn't do anything fundamentally wrong as a whole. He was put into a position, and unfortunately for us, he put into a position that he could correct, be less favorable for us and for him, because he does own Ether, so he did feel it. But let's be honest, he was put in a position that was not favorable for him. So let's put that to bed. And I think the last thing we're going to cover is the market. So again, we're always told the trend is our friend. You got to go with what the markets have done. Well, what are the theories or the relationships between the bull runs that we've all been told or floated? Well, we've been told much to like 2017, we could be looking to have this kind of end maybe in that window around the end of September. But what if I were to tell you that maybe after you go back and compare this more to the 2013 bull run, we might be looking at an end of November. Now, what's even more shocking, and you got to understand where we were in 2013 and where we are today, are two completely different markets, guys. Right now alone, we're looking at adaptation in markets. We've got huge money flowing in with the PayPals and the Visas, the MicroStrategies, Grayscales, buying this stuff up like crazy. We didn't have that in 2013, okay? So if we go ahead and jump on this chart real quick, and we look here at the right-hand side, the left-hand side of the screen, I'm going to put a yellow line. All right, so if we jump on the charts real quick here, guys, we can see on the lower left, I've got a yellow line, and that's indicating the January 1st start, okay? So if you look at January 1st from 2013. This is the blue lines that I have going across in the candles, and how they would look in today's market, okay? Now, if you notice, right off the hop at the start of this January, we pumped up and then came back down and followed this trend, and followed this trend up perfectly to the point where we both peaked out at the same time in mid-March. So what should we be looking at? Well, in mid-March, so right here, if you look, January 2013, we started at $12. By mid-April, we were at $241, which was a 1,991% increase in the market, okay? Following that, we had an 81% correction, and we fell down, and then we sat there and we stacked accumulation of support and moved sideways until about July. So what do we do in this January 1st? Well, we opened in around $26,000. And between January 1st to mid-April, where we hit that new local all-time high, still currently there for us right now, we hit $65,000. And that was a 145% increase. We followed by just recently with a 29% correction. And we're starting to see the similarities in the markets. Sure, our pumps aren't quite as high, which we knew it wasn't going to be based on the amount of dollars we're playing with now. We're not talking about $12. We're talking about a $26,000 open to this year. Well, Bitcoin in that year went on to close at $1,160. So where does that leave us to believe where's Bitcoin going to go this year? If you look at 2013, it went from literally January 1st to December 1st of 2013. At December 1st, that was the peak of that bull run. It lasted 11 months. Okay, go back and check it out. I had to look at it because I've heard that we're going to see this mini cycle, and Carl the Moon talked about it, and he's talking about a $32,000 to $33,000 Bitcoin. Well, it just so happens if you trace it out on where we are today versus where we could be, if you look to the start of June, we will be somewhere in the $32,000 to $35,000 Bitcoin range. Now, again, from pretty much the middle of April, almost the start of April on in this run compared to the other run, we have been a solid 10% ahead of the trend. Okay, so it may not exactly match up, but it certainly does rhyme, because you can see on the two charts how they do marry one another very nicely and follow the same trend lines up and down. Okay, so we're not talking about maybe just this shortened by the end of September all be over. And I think it doesn't matter who you listen to for influencers, everybody's all over the place right now, because, well, we're not expecting this kind of manipulation. These pullbacks, we've always said from the beginning, are healthy for the market. So what if we do have a drawn out period of accumulation here for a while, where we're going to work our way down maybe to $40,000, or if we stayed at, well, we looked at staying $48,000. What if we got down to $48,000? What does that look like? Well, if you look again at the chart, it's showing us, if we follow the same trends as 2013, that we're going to peak out at around that almost $300,000 range. And that's fantastic, because I'm hearing people talk about a $205,000 to $350,000 Bitcoin. So we're in that ballpark, plus or minus. But we're in that ballpark, guys, of a $300,000 Bitcoin, and we're still following the same trend that'll get us there. It's just going to be drawn out for the summer. Now, you say, well, everybody's saying the summer is going to be the most explosive. Well, if you looked from July to December, where it went from $66 to $1,160, it had a 17.3% increase. Well, again, we're dealing with different dollar ranges. So what if we did something like we'll use the same trend, but we'll say, what if it went from $33,000 to $300K? That's an 810% gain from the low of the summer, which would, like, nobody wants to hear people talk about Bitcoin in its $30,000 range because everybody was saying it was never going to get back down below. But what if we're not looking at a 2017 bull run here, guys? And what if we're looking at something like the super cycle of 2013? That's super exciting. More drawn out for sure. For sure. But what have we preached? Everybody, if you listen to anybody that's an influencer with cryptocurrency, what are they preaching? They're preaching to be patient. Steady hands. Don't let these whales shake you out. Don't let the market manipulate you to getting off of your stacks. You gotta understand, it's not like you're gonna sell and nobody will pick it up, because it'll be snapped up faster than you hit the sell button. There's people waiting to buy these assets. They're shaking the price to shake you out. So you guys need to understand, this is not an overnight millionaires club. You've got to put the time in. You got to do the work. You got to do your research. Gary Vee, I just watched the video now. He swears a lot in it. It's cool. It's fun. It's edgy. It's exciting. But what I really like about his concept of what he's telling people right now is, don't do anything until you do your 50 hours of homework. And every YouTuber you listen to right now, I guarantee you, they're telling you, this is not to be construed as financial advice. This is not to be used to buy. Everybody should go out and do your own research. Of course you should be doing your own research. Unless you can absolutely light that money on fire and be prepared to lose it like that, you definitely have to start looking at what you're buying. Guys, the market is just heating up. Sure, we're in a cool down right now. And yes, it's terrifying watching the way the portfolios are responding. But instead of looking at it as just a huge loss, look at it as that opportunity to buy in. Dollar cost average. People talk about it all the time. If you're just getting into cryptocurrency now, this is your chance to have a $45,000 average if the market does correct down to 33. But hey, it might even be a chance for you to get a $52,000 average or a $50,000 average. Guys, it's just about being smart and looking at opportunities a little differently. I'm not telling you to go out and remortgage or refinance your house or take a loan to buy more Bitcoin or more Ethereum. I'm heavy on Ethereum. I'm heavy on Cardano. But you got to do what your comfort level is and look at these opportunities to maybe adjust things. Maybe there's stuff in your portfolio that is not working. And now you're going to say, but Hodler Fudd, what if I pull out of a project and it goes absolutely berserk? Well, guess what? It went absolutely berserk and there's nothing you can do to change, because based on your research, you thought that you had a better chance to make money here. Don't live in this moment of going, well, if I had just done this, or you can't live on your losses or the past. You got to live in what you're looking at today and tomorrow. So if you think that there's a better opportunity to be in, you should try to invest into that. But guys, these are just my opinions. It's not financial advice. You have to do what you feel is right. If you don't have the stomach to go through these markets, then maybe it is time for you to bow out. But I'm telling you right now that patience will be rewarded. Perseverance will pay off. People who tell you that they made $1 million on any kind of crypto asset, those overnight stories are gone. They're gone. If you're going to make $1 million in cryptocurrency, you're going to have to put some time in. There's stock market millionaires being born every day because people can read the markets and go out and do that. Crypto assets are the same thing, guys. Sure, more volatile, but they're providing the same opportunities and at a greater rate. A greater rate. Okay, guys? You've got to understand that there's opportunity here. It's about finding the right one for you. I will give you some investing advice right now, and that is if you're just new to the space, you're just trying to figure out what assets you want to pick, don't go all in on just one, but do yourself a favor. If you've got $1,000, don't own 10 tokens. Own 2, maybe 3. And that could be the same said from anybody that's going from $100 to $10,000, $5,000. Anything below $5,000, you should be trying to stay in that 3, 5 at the most. Okay, guys? Because you don't want to be spreading yourself too thin because you might miss out on some of those gains you're looking for. Now, if you had $20 in every project that you wanted to and at 10x, congratulations, you've now got $200. I don't know about you, but $200 is not life-changing money for myself. However, if I had $1,000 in there and it 10x'd, well then hello, $10,000 is definitely something that I can do with, or something that I would be happy with. $1,000 I'd be happy with, but let's be honest, guys. If you've got money in, don't spread it too thin so that you won't notice or be able to recognize your gains. Because again, $20 to $200, yes, it does give you opportunities, but it also doesn't give you enough of an opportunity to make life-changing money. So that would be my biggest suggestion as investment advice for anybody new to crypto assets. Anything below $5,000, stay in the 3 to 5 token range, okay? You don't need to spread yourself out that thin. Get some exposure to Bitcoin. Maybe if you had $1,000, I would maybe put $200 to $300 in Bitcoin. Give yourself some exposure to something like an Ethereum or a Polkadot or a Cardano, as they have the same amount of potential for run-ups here. Ethereum might still have a lot more, especially if we're talking about a $300,000 Bitcoin, and the market capitalization ratio between Bitcoin and Ethereum, what that would mean is somewhere around a $40,000 Bitcoin. So that's quite tasty. So definitely keep an eye on Ethereum. And I think finally, I guess the last $200 or so, or what do we say, 300, 400, you can maybe take your last $300. So I have $300 in Bitcoin, $400 in Ethereum or a project like Ethereum, Cardano, whatever. And then I would put my last $300 in 2 other tokens. So I would keep this at around 4, and I would maybe do something. So say if I did Ethereum for $400, I would do like a Cardano for 150, and then I would look at something that's low cap or smaller cap, and maybe go and dive into something like a VeChain or Audius is a little high on the radar, but something in that more risky market, expecting big things from VeChain. So, but that's kind of how I split it up. Now, those are not my 4 picks for you because that's something you need to find out. But if there's stuff you want me to dive into or research or just give you a price prediction on, go ahead, drop a comment below. Let me know what it is you're looking for. This video is a little bit longer, but I got a lot to say because I've had a few days off. So just fighting a sore throat still. So, but yeah, anyways, guys, things are hopefully gonna plod sideways for a little bit and give us that absolutely huge 800% pop towards the end of this year. I don't really know if there's much more to say other than to protect yourself. Don't wreck yourself. Hodler Fudd out.